Hello, my name is Dixon Gardner. I am a California registered investment advisor, have an MBA in finance from NYU, been a California CPA since 1996, and I am currently an attorney practicing bankruptcy law and business law since 2003. My email is dixongardner@hotmail.com. I'm seeking investment advisory clients. I charge 0.75%, less than 1% of total assets per year for my investment advisory services. This is less than most mutual funds. I can build you a custom portfolio for growth, value, and income investments. If you want to send me your email at dixongardner@hotmail.com, I'll send you my Excel sheet with my comments and calculations that support this video. After watching this video, please click on the subscribe button and leave me your comments. Disclosure: this is a video about my views of Ambev SA, which is Inc. in Spanish, for the company American Beverages, called Ambev for short, which trades with the ticker symbol of ABEV on the New York Stock Exchange. Ambev is a Brazilian-created corporation and conducts operations all over the Americas. There is a risk from Brazilian law that you would not have with an American corporation, and there is foreign currency risk with Ambev since it operates in 18 countries in the Americas and receives the bulk of its revenues in foreign currency other than US dollars, although most of that foreign currency is based on the dollar on a daily basis. You rely on my views about Ambev at your own risk, which you're looking at the logo of the company. I owned a long position in Ambev before I ever prepared this video. I have no plans to initiate any other position in Ambev within the next 72 hours. I am not receiving compensation for this video. I have no business relationship with any company and securities in this video other than as an investor. Past performance is no guarantee of future results. No recommendation or advice is being given as to whether any investment in any security, including Ambev common stock, is suitable for a particular investor. You must conduct your own investment analysis, your own due diligence, and analyze your specific financial situation before you decide to buy or sell any security, including Ambev. I'm not responsible for any information provided by Ambev upon which the video is based. So that's the Ambev company logo, based in Brazil. Now let's look at the products that Ambev sells. Sells a lot of beer. That's its primary focus, but it sells more than that. We'll get into it. Okay, so let's get into the facts on why someone would be interested in buying Ambev. All right, Ambev is the largest brewer in Latin America. Here's my Excel sheet. Starting from the top, in terms of sales volumes and one of the largest beer producers in the world. You must know that Budweiser AB InBev owns 60% of Ambev, so it's essentially a subsidiary of Budweiser. So Budweiser is not only is it the king of beers, but it's a huge monopoly in the Americas. All right, so starting on the left, on the 2024 sales, Budweiser has 59 billion, followed by Heineken with 32.8 billion, followed by Ambev with 15 billion, followed by Molson Coors at 11.6 billion, followed by Carlsbad at 10.7 billion, followed by Constellation Brands at 10.1 billion. Now, operating cash flow for Budweiser in 2024 was 14.2 billion, Heineken 5.7 billion, Ambev at 4.8 billion, Coors at 1.9 billion, Carlsbad at 1.6 billion, Constellation Brands at almost 3 billion. Now you can see the profitability of operating cash flow per revenue. There's 24% for Budweiser, 17% for Heineken, Ambev at 32%, 16% for Molson Coors, 15% for Carlsbad, and 29% for Constellation Brands. So you can see that Ambev and Constellation Brands are the two best run companies. For $1 of revenue, they get 30 cents in profit. So Constellation Brands, well-run company. You can see that in the price per operating cash flow. Here's the market capitalization of the companies. 99, almost 100 billion for Budweiser, 39 billion for Heineken, 29 billion for Ambev, 11 billion for Coors, 14 billion for Carlsbad, 30 billion for Constellation Brands. You can see it has a price per operating cash flow of 10 times, followed by Carlsbad at 9 times, even though Ambev is very profitable, like double the profitability of Carlsbad, Coors, and Heineken. It's only trading at 6 times operating cash flow. So right there, you can tell that there's some money on the table to be made from Ambev, because it's not as fully valued as Constellation Brands, but it sells more beer, makes more money, and is more efficient, because you get 32 cents for $1 of sales of Ambev. You only get 29 cents for $1 of sales of Constellation Brands. Anyway, moving down, look at the dividend yield. Budweiser is 1.8%, Heineken 2.7%, Ambev nominally is at 5.9%, but after you take into the Brazilian withholding tax of 15%, after-tax yield is 5%. Wilson Coors at 3.2%, Carlsbad at 3.6%, Constellation Brands at 2.4%. So Ambev is significantly above its competitors on a dividend yield basis, which also indicates that it's good value. All right, Ambev pays its dividend at year end, just paid it. And you should note that the operating cash flow compounded annual growth rate, CAGR, is almost 7% in the last 5 years for Ambev. So it's growing very rapidly relative to the others that I have there. Okay, moving on. Ambev sells beer, carbonated and non-carbonated soft drinks, and other alcoholic beverages in 18 countries in the Americas. Brazil, which includes Pepsi products and Ambev's Guaraná, non-carbonated soft drink, and Fusion energy drink. Ambev sells beers all over Central America and the Caribbean called CAC. They are the top beer in the Dominican Republic, St. Vincent, Cuba, Guatemala, Barbados, Panama, and Costa Rica. In Southern Latin America, they're the dominant beer seller in Argentina, Bolivia, Paraguay, Uruguay, and Chile. Ambev owns Labatt in Canada, and Labatt sells its beer in the United States of America. And Canadians claim Labatt beer built Canada, and there's books on that, and is a very good beer relative to Budweiser. I don't know if that's saying much. Okay, you should know that given Latin immigration into the United States, they want to drink beer from their home country. They don't leave that when they cross the border. So Ambev has potential to sell more beer in America through its brand. All right, Ambev is the largest independent Pepsi bottler in the entire world. Okay, and the trend is for beverage companies to enter adjacent markets. Ambev has a geographic monopoly to sell Pepsi in Brazil, which has 200 million people. The United States has like 350 million. All right, another thing about Ambev that you should be aware is that the input costs for Ambev's brews are low relative to inflation risk. Aluminum, sugar, corn, wheat, and PET is plastic bottles. That's what you drink it out of. That is recyclable. That's lowering costs. So what you drink out of will be used plastic, but they've recycled it so you don't get sick. All right, so opportunities. Ambev has power to increase prices on its products over time. This is the dominant reason that a guy named Warren Buffett owns lots of Coca-Cola. So the compound annual growth rate of revenue from 2019 to 2023 was 8.7%. The volume that Ambev sold during that same period was only 2.5%. So you got 6% growth due to price increases. That proves that you got pricing power. You're only able, in fact, in Canada, you can see volume went down over those 4-year period. The revenue went up 6%. So there's your proof. In Central America, same thing. Volumes went down 2.6%. Revenue's up over 8%. So selling beer is good business because you increase prices over time. That's the same idea behind See's Candy and Coca-Cola. All right. So let's look at the revenue year to date here for 2024. This is only 3 quarters. They're at 15. Ambev's at 15 billion. For a full year in 2019, they were at almost 13 billion. That's over 3% compounded annual growth rate. Operating cash flow is flat when you compare it like that. Free cash flow is up by 2.8%. That's not much to get excited about. The dividend's only up 2%. But if you take the full year of what estimated 2024 will be, the compounded annual growth rate is going to be over 9%. Operating cash flow will be almost 7% compounded annual growth and break 6.4 billion, which may be bigger than all of Heineken. Okay, so the beer market's getting very consolidated into Budweiser and Ambev. Okay, and they can sell each other's products. All right, and capital expenditures, they're not egregious. So you can see that free cash flow estimated to be 5 billion in 2024. Okay, currently the 9-month market was 3.8 billion. All right, and if they increase the dividend over the same period, I don't know where that will happen. Not there'll be an 8% growth. All right, let's move down. Okay, other advantages Ambev has: it's selling more products in its existing markets. It's a subsidiary of Budweiser, so it has all access to Budweiser's products all over Ambev's markets. All right. Now, the principal market for Ambev is Brazil. Brazil is the 9th largest gross domestic product in the world per the International Monetary Fund. Brazil has between 2 to 3% GDP growth per year, much like in the United States of America. Brazil is the 3rd largest beer market in the world by volume. So Brazilians spend a lot more money on beer than other people. All righty. Ambev sells the top 3 beer brands in Brazil: Skol, Brahma, Antarctica. All right, and they're always positioned in the highest price segments in the market, and their competitors only come in at the bottom, which is where you want it to be, because that means you make most money as the market grows. Okay, Heineken is the largest competitor to Ambev in Brazil. Okay, there's also a craft beer and import threat that's growing in Brazil, but probably not as bad as in the United States. Beer sales are highest in the summer in Brazil. That's November to May. Carnival, which is going on this month and into the next, is the highest consumption period for beer in Brazil. It's hot. People have several days to party, and they do. All right, Ambev is part of a geographic cartel on distribution in Brazil. Okay, it's owns the dominant distribution system for beer and soft drinks in all Brazil, which has 200 million people. All right, carbonated soft drink products, CSDs. Okay, there's some are listed: H2OH, exclamation, Pepsi Black, Guaraná, Antarctica Zero. I want to talk about Guaraná for a moment. Guaraná is a domestic soft drink in Brazil. It's very good. I've had it myself. I anticipate that to be a product that Ambev and Budweiser roll out throughout the world. The potential big money maker too. All right, so Ambev, because it's a Pepsi distributor, sells Gatorade, an isotonic product, iced tea, Lipton tea, and energy drinks such as Fusion, which Ambev owns, as well as Red Bull under license. All right, you should be aware that the beer market is going global. Okay, the old beer market that I grew up in had national brands for each country or regions of a country. Now, the new beer market is global brands for every country. So you'll find Mexican beers, you'll find Brazilian beers being sold in America, and you'll find American beers being sold all through Latin America. And the reason this is economies of scale to large brewers for advertising, marketing, brewing, and distribution. The bigger you are, the lower your costs, your unit costs are. If you've watched the Super Bowl over the weekend, you know that beverage companies are interested in advertising to mass markets, and the bigger you are, the more advertising you can pay. All right, Ambev's owners, the way they created this monopoly-powered system is they would buy, about every 4 years, a number 2 or a number 3 national brewer or a number 1. And then they got big enough that they were able to buy Budweiser. So that's how a company from Brazil bought up all of Brazil, bought up most of South America, bought up Belgian beers, and then it went after Budweiser. And it paid a 14 times operating cash flow price for Budweiser, which is the most that Warren Buffett, who was involved in that deal, has ever paid for a company. All right, there's a book called Beeronomics, and if you're interested in investing in the beer industry, that's a must read or must listen. All right, so another opportunity for Ambev is it can buy new beer brands around the world. It could buy brands in Africa, Asia. China is the largest beer market, but per person consumption in China is low. All right, and Tsingtao beer, you can go look at that. That's not a very profitable nor a very big beer brand in China, even though that's where it's from. All right, so Pepsi bottlers, there's a potential to buy Pepsi bottlers around the world. There's a company called Varun, Varun. It operates Pepsi in India and South Africa, claims to have 1 billion potential customers. That would definitely be a target for Ambev. Another opportunity for Ambev is to sell Guaraná into the global carbonated soft drink market, starting here in America and branching out. Also, they sell a product called Malta in the Caribbean. This is rum that's not fermented. Yours truly is hooked on Malta. There's a Malta in my refrigerator in my house. It's a Puerto Rican brand, which I'm not going to say which one it is, but Brahma Malta in the Dominican Republic has got to be good stuff, and I'm surprised they haven't started to try to market that into America, since there's tens of millions of Latins that now live in the United States. All right. Ambev will also be able to sell its beer brands wherever Budweiser is. So that would be the United States, China, India, and Africa. And finally, there's a Trump play. Latin American countries have changed their policies since the presidential election. You should know Argentina has a right-wing president who's bent on cutting spending and making Argentina into a better business environment that will spur investment and growth. And the beneficiary of that will be Ambev, which sells the most beer in Argentina. Now, Trump's governing will change, and it has changed Cuba, Bolivia, and Venezuela to be more market economies. You should know that Venezuela was one of the top alcohol per person consumers in the world in the late 1970s, and Ambev has a presence there. And when the communists are finally thrown out in Caracas and Venezuela cures itself, that will be a potential boom for Ambev, because they'll be able to sell a lot of beer in Venezuela. All right, and they start drinking in Venezuela around 5 years old. And there's no Alcoholics Anonymous there. All right, competitors to Ambev. Coca-Cola in Brazil for Pepsi products. Local breweries. I didn't name any, but there's still some local breweries that Ambev can buy. There are global breweries, the biggest being Heineken, even though I misspelled that. There is a craft beer movement in the big cities of Rio and Sao Paulo. There are imports into Brazil now and other markets, but these are usually high priced and they're not a threat. None of these threats, which Budweiser has, are significant to Ambev's products as I speak in its markets. All right, so here's the discounted cash flow for Ambev. I'm using the 5-year estimated revenue growth, 6.9%, and I'm using the estimated free cash flow of $5 billion. That's projected out at 6.94% compounded annual growth for 5 years. From $5 billion goes up to $7.1 billion. I used 11 times free cash flow. Why? Because Coca-Cola bottlers sell for that amount, and you have currency risk that has to be discounted, so it won't be a 14-timer like the Budweiser transaction was. There's $3.8 billion in cash on the balance sheet. That's almost a year's of operations. Total amount of the value is almost $76 billion. Shares outstanding, 15.7 billion. That gives you a 4.83 fair market value per share. It's currently in the New York Stock Exchange at $1.84. So That's 160% premium over the current market price. At $4.83 a share, that comes out to a 12 multiple, and 11 multiple is $4.47 a share. So this is a definite double if it were to ever be bought out. And that is a potentiality, and we'll get to that in a moment. The dividend per share is almost 11 cents. That's a gross yield of 5.89%. Even after the Brazilian tax, it's 5%. The U.S. Treasury bond yield on February 7th was 4.45%. So you're making better than a money market, and you have the opportunity to grow your principal, unlike a debt instrument. All right, so again, reiterating, InBev bought Budweiser for 14 times operating cash flow. Smaller Coca-Cola bottlers sell for 11 times operating cash flow. To see the numbers on that, see my video, Things Go Better with Coke. Anheuser-Busch InBev, excuse me, owns 62% of Ambev. And the reason they may buy more is at 80% ownership, they consolidate and they get tax benefits in America. All right. So the New York Stock Exchange only trades 28% of Ambev's outstanding common stock. And Ambev believes its common stock is undervalued. Last October 30th, the Ambev Board of Directors approved a share buyback program of up to roughly 10% of the outstanding common shares, 155 million. And that's in effect until 2026 of April. And this is 3.5% of the total shares that trade on the New York Stock Exchange. It's 10% of the total outstanding shares, but only 28% trades on the New York Stock Exchange. So that'll be a significant reduction and potential growth. All right, so summing up, Ambev is an income stock because it yields more than a 20-year U.S. Treasury bond, 5%. It's a growth stock. Revenue is growing at over 9%. On an estimated basis from 2019 to now. Ambev is a value stock because it sells at around 6 times operating cash flow. Fair market value is 11 for a buyout. You can see that Constellation Brands sells at over 10. And it sells less volume and is not as profitable as Ambev. All right, so a leveraged buyout analysis. This is interesting. This shows that Ambev, this is under the lower number too. This is under the actual number, the 3.8 billion as of September 30th. You have a margin of safety of 90%, so you have free cash flow for debt service of 3.4 billion. Interest rate on the debt would be 8% roughly, and that's to bump up the value. If I went higher at 10%, it'd be lower. So the principal of the debt's going to be 43 billion. A 20% equity investment would be 8.6 billion. The 3.2 billion in cash will give you a total capitalization of 54.8 billion. Excuse me, divided by the 15.7 million shares outstanding gives you, 15.7 billion shares outstanding gives you a price of $3.50 roughly per share. And that's like a 9 times multiple. So if you use the 5 billion amount that's estimated for the end of 2024, you'd even get more. So even on actual number basis, cash flow, the share price is significant, almost half the value of what it's trading at now. Okay, note cash, 3.8 billion. Total debt is 620 million. So you have net debt of 3.2 billion. Okay, and that's even being conservative because you could use the other 620 million, just add that onto the principal of the debt. So there's lots of cash to return, lots of cash to pay dividends, lots of cash to do the buyout. And the final thing you should note is if you take the dividend rate for the last 5 years of 8.11%, that's based on the estimate for the 2024. Excuse me. You take the current dividend of 11 cents, compounded annual growth for 5 years, divided by 11 in 2029, discount it all back, you get $1.62. You have 24 cents per share on the balance sheet. That gives you $1.86, which is roughly where it's trading right now. So there are not a lot of companies that can trade at fair value on their dividend growth. So that's proof that Ambev is a value that in the market is going to be worth a lot more than it's currently trading at. how much more, that's all going to depend on ultimately on what Budweiser wants to pay for it when it wants to buy back. Because the buyback can only last, if you take 3% in 8 years, the company's almost fully purchased by Budweiser. So we'll see what happens. Okay, thank you very much.